Hello traders, my name is John Paul, daytradetowin.com. We have done a few educational trading videos for everyone to see. They are multi-part, so you do have to go from part 1, part 2, all the way to part 5. This series of videos is how to filter trades for higher success. I believe if you're a day trader like me, we should be using all the tools available to us to help us be successful. One of those tools is filtering trades. So I put together a few videos to demonstrate and to show everyone in the trading community how filtering trades can help you become a better trader. How to properly filter a trade is what I want to discuss in this video series. As day traders, we have only a few opportunities throughout the day. So let's be successful. Let's capitalize and focus on the best trades, not every trade. I don't take every single trade throughout the day. I try to really concentrate on the best setups possible. Even if you want to take every trade, it's best not to. Let's be patient. Let's wait for the proper setups to occur. There's one technique in particular that I use, and I think everybody should be utilizing. I'm going to show you in the following series a number of charts and explanations on how to properly filter a trade. So when you enter a trade, you know in advance whether or not it's going to work out in your favor or not. I use price action as my main filtering method. Really, price action is one of the best methods I teach day traders. Those of you who are using indicators, you have asked me, and also we agree, that indicators usually lag behind price. I say usually because when there's a big up move or big down move, that indicator might catch it. But normally, if you're using indicators, haven't you noticed how they always lag behind price? As day traders, we should overlook traditional indicators and really concentrate on price action. Actually trading the price, not the indicator, is what we're after. I have here a page taken straight out of one of my courses, and really I'd like to demonstrate how indicators catch some moves when there's a great big up or down move, when it's just a long trend. But obviously we know that most of the time markets don't work this way. They actually chop back and forth. They trade in ranges, and then they break out and they go long for a little while, and then they consolidate again. They are chopping back and forth, and those indicators that we all follow and that we all love, moving averages, stochastics, whatever it may be, they are only following the price, but following the price one step behind it always. I always call this the lagging effect. I've been teaching this for some time now, and this is what I've referred to as the lagging effect. The setup taken directly from the course here in this chart shows a short entry. But there's more to this short entry than that. This short entry, as you see, it was profitable, but if you were to filter this trade, would you know how to do it? Would you enter exactly as the course describes here? This is the automated setup taken from the chart. Filtering trades is a method used by many professional traders. I want to demonstrate how I do it. Let's let the price show and prove to us, not by using an indicator, but using price itself. I want to see price prove and show us that it actually wants to go in the direction that we perceive. Knowing our entries is really the first step. How are we going to filter a trade if we don't know where to enter, right? So the first step is knowing in advance where you want to enter this market, whether you want to go long, whether you want to go short. But knowing in advance what you're going to do is key. Now take a look at this long entry as taught in the course. It's a nice long up move. It's classic signal that all traders that know this particular setup are using. But is going long the right thing to do? Why? It was a winning trade, but what if the entry signal was wrong? What if it went down? How would we filter this trade? Would you know how to filter this trade? There's a reason to take this trade long, but not because of what you may think. Let us use price action to our advantage in filtering trades like these, so we are more successful and we're on the right track when entering a trade. Filtering trades really does maximize our winners. When filtering trades, first you must know when and where to enter. This, I believe, is key. If you don't know why, where, or when to enter a trade, then really, what's the point in trading? We need to know why we're doing it. So the first step is knowing when to enter the trade before we get into filtering. Then, after you know exactly where you want to be in the market, then we look and concentrate on filtering. If you just blindly jump in and out without reason or without a strategy, filtering the trade will not help you. So it's important to know in advance where you want to enter, when, and where. Okay? And it's very important to understand that when entering a trade, we use filtering really to limit our losses. Filtering trades is intended to maintain the high probability winners and to keep us out of those losing trades when we enter the trade and the market just goes straight against us. Okay? So we're using a filtering method using price action to help us stay out of trades like that. If we can use this to our advantage, why not? When most traders aren't using this method, I think that we definitely have an edge when trading. Now follow me to the next video and let me demonstrate to you some filtering methods.